Let's talk about Apple CEO Tim Cook pulled three rabbits out of the hat. Now, pulling just one rabbit out of a hat is pretty good trick. I got to say that. But pulling three rabbits out of a hat, well, that's nothing short of a miracle. Now, in the spring of this year, 2025, Apple stock fell below $170 a share, and it was faced with enormous tariffs on the iPhones. The potential loss of $20 billion per year payment from Google, and while sales for the iPhones, well, they just seem to be stuck in the mud. And that's worried back in the springtime.
Yeah, and when you look at Tim Cook, I mean, I'm going to say he's a great operator, right? I think he's very efficient in running the business of Apple. He's not Steve Jobs in terms of the creator, the innovator, but it's impressive how he manages such a large business and the efficiency that he.
And he's got to be a great negotiator. What he did, we'll explain, but he's got to be a great negotiator.
Yeah, I mean, to that point, I mean, you look at the tariff situation, right? To handle that, Tim Cook did promise U.S. investments of $600 billion over 4 years. And this wasn't necessarily what President Trump wanted to the exact extent, because it's not bringing iPhone production back to the U.S., but it was an investment of making AI servers in Texas and offering manufacturing training for U.S. businesses in Detroit. Apple also announced a $2.5 billion commitment to make iPhone cover glass in Kentucky with Corning and a $500 million partnership to produce rare earth magnets in the United States. Now, after this investment pledge, the president said Apple would be exempt from tariffs on imported electronics, which obviously was going to hit them very hard as a lot of their products come from China. Now they're trying to shift to India, but obviously there's some tension between the U.S. and India as well. So, I mean, this would really hurt Apple quite a bit in the bottom line. And I'll say the other thing, too, that Tim Cook did is these big pledges that they're promising. I don't have the exact dollar-for-dollar accounting, but it's a lot of partnerships and other companies kind of doing. So it's not like Apple's writing a check for $600 billion. They're kind of getting other companies to take place in it. And again, I say this all the time. Apple, great business. I think Tim Cook, again, not a great innovator in my mind, but a great leader and a great manager of this business. But it's just, we'll get into the valuation, it's just too expensive.
And you're right, because they did say that he's not done any innovation. He's not Steve Jobs. They do say the next CEO, because Tim Cook is now 65. Yeah. The next CEO, they're saying, we do want somebody that's an innovator, taking nothing away from Tim Cook, because he is a great operator of the business. He's done very well moving that company, having that company grow, growing the stock. Some things he says, like, wow, I mean, we can't believe where the stock's at. But let's talk about to save the $20 billion yearly payment from Google. That was a big thing, because we said, if that happens, that's $20 billion of pure profit they're going to lose. I mean, they had so many things against them. We said, no, the stock is going to have some problems. But Mr. Cook, another smart thing, sent Apple's senior vice president in charge of services, Eddie Q, to testify at court. Now, Eddie Q convinced the judge that technology shifts are so powerful that they can take down even the most massive of companies. In other words, the judge did not need to impose harsh penalties, and the market would eventually, well, take care of itself.
The other interesting thing, and I've talked about this before, is I still don't know why Google Alphabet pays $20 billion for this.
I don't know.
To me, it just doesn't seem like there's very good ROI at this point in time, especially now with the kind of advancement and popularity of ChatGPT and all these other, AI tools, the Perplexities, the Claudes, Anthropics. I mean, there's so many out there. I just don't see how that $20 billion is going to pay off for them.
For Google.
For Google. Obviously, it pays off great for Apple.
Yeah, and that's the thing, too. I want to make sure that people understand that he convinced a judge, like, no, you don't need to take that away. We'll have other problems. So therefore, Apple still gets that $20 billion every year.
And I just almost wonder if, like Google, Alphabet, they're just too scared to rock the boat with Apple, that if they say, oh, we're not going to pay the $20 billion anymore, they're like, fine, we'll really push you down. And it's like, maybe that's why they're still doing it. They're kind of pigeonholed, but it just doesn't make sense to me why Alphabet makes that payment. No. I don't think they make $20 billion off that deal. Generally, companies, when they invest $20 billion, they want to make $30, $40 billion off of that.
Yeah, that's not a break-even thing.
Also, too, we talk about another thing he did that was pretty phenomenal is somehow consumers have been convinced that the new, and this just blows me away. I was looking at this the other day. I was like, what? The thinner smartphone called the iPhone Air it's a must for consumers, people think. The marketing has to just be phenomenal because the iPhone Air has a weaker camera. a single speaker, a smaller battery with a shorter life, and this is what gets me, a higher price tag. Hey, let me give you a worse product with higher price. It just doesn't really add up. And I would understand, maybe before like the iPhone SE, right? It came with a cheaper price tag. So that's why you were okay to give up some stuff. But all you're getting is a thinner phone, and that's worth more money? Especially if you have a thinner phone, you probably need to put a case on it. So you really lose the thinness of it at the end of the day.
And and I don't know. I mean, sometimes where's my phone at? Now, if it's so thin and so light, you won't be able to find your phone because it's so thin and so light. But you're getting less production out of the phone, which is kind of strange.
And I don't know why they did the iPhone Air or whatever they're calling it, because to me that just adds expenses, because they might have already been upgrading to a different iPhone. Well, why would you add now the complexity of a new SKU or a new product when it really, I don't think, creates much value? But I mean, the other thing too, when you talk about this iPhone 17 lineup, Apple seems to have convinced people it's worth an upgrade. For me, I don't really see the big deal. It seems exactly like the other iPhones to me, but hey, people might prove me wrong on that. And with this excitement around the iPhone 17 lineup, Apple is now predicting up to 12% revenue growth in the holiday quarter, which was twice what Wall Street estimated.
And and it's funny. I mean, I don't know why. Like, to answer your question, why do people keep upgrading the phone? I mean, I don't even know what number I have. Do I have the 12, the 15? I have no clue. I will get a new phone when it just doesn't work. Why would you go out and get the iPhone 17 if your phone is working fine? Because they're not cheap, and you're paying for it somehow. I mean, take that money, put it in your 401k, do something else with it. I mean, it's just, if your phone's working, everything it does, I just don't get.
Well, and last time because my phone broke the last time I had to get a new one. And
you had an 8 or something.
Yeah. And I think I got like the 13 or something. I think I have the 13 now. And I remember it was after the 14 came out, but I'm like, I'm not going to get the 14. It's like Verizon wanted to charge us, I think, like $40 a month for the 14. And I said, well, how much is the 13? They said, free, as long as you stay with Verizon. I said, well, I'll take that one. And I don't see the differences, and I'm not a techie, I guess, but it is what it is.
Maybe it's like designer brands. You go around like, see, I got the new iPhone 17. I financially, I don't see the point of it. But so let's kind of summarize this for you. In roughly 6 months, the stock, after dropping to a low of $169 a share, is roughly up $100 and somehow supports a PE, a price earnings ratio, of 36. Now, I got to say, congratulations to Tim Cook and shareholders who held on to Apple stock. But if anyone said they knew Apple would be fine, either they have a working crystal ball that really told them this is going to happen, or they really did not understand the problems facing Apple, because these were enormous problems. And I thought for sure that the president was not going to relieve the tariffs, because he did the first term. This time, like, no, not going to do it. I mean, again, they did a phenomenal job, but there's no way somebody can tell me, well, I knew this was going to be okay. No, I'm sorry. You're lying to yourself.
Yeah, and I'm going to say we're talking pretty positively about how they managed through this situation, but I'm not going to say I'm giving the A-OK to go ahead and invest in the stock. I mean, there's still a bumpy road ahead. When you look at operating expenses, I was kind of surprised by this. They did come in slightly over $18 billion, and this is an estimate. This is not real expenses yet. So this is the estimate for December. They're looking at about $18 billion. That's a 19% increase year over year. And like we said, revenue's estimated to climb 10 to 12%. So you're not even keeping up with that revenue growth on the operating expense side. And I don't see anything coming out of left field to create this big drop in the share price, but I just can't see anything that's going to cause it to continue climbing going forward. I mean, they got through all the negative news, so they're not really butting up against much negativity at this point. It's expensive. And for me, it's like, we also talk about Costco. Costco is trading at 50 times earnings. I mean, yeah, maybe Apple goes to 50 times earnings, but I don't want to take that bet. I mean, it's much more likely that Apple goes back to a historical multiple of 16 to 17 times than an outrageous multiple of 50 times.
Right. Yeah.
But if you hold Apple, that's what you're betting on. That multiple is going to keep going and going and going. And at 36 times the trailing 12 months earnings, it's expensive.
Yeah, I think what we're saying, you probably won't see Apple back down to the 170 level, but it could very easily fall 10, maybe 15% down to low 200s or so. But there's very little chance of it going to 320, 350. There's just no reason for it. And if they do have, I mean, this past week they had, more layoffs expected. I think things kind of stumble a little bit. If we don't have a phenomenal holiday season, they don't do what you say, a 12% growth on the sales for the holiday season. If they come in at 8%, still grew, but that's way off the mark.
Well, that's where I disagree. I mean, you could have Apple get taken down, and I think things are going well.
What take it down? What do you think?
If you miss, if you come in and they're now saying 12%, and all of a sudden, and this is the funny thing with Apple is you keep talking about this super cycle that's coming, the super cycle that's coming. It's almost like it keeps pushing the stock and not allowing it to dip too low. But if the super cycle never actually really comes and revenue doesn't come in at 12%, it comes in at, let's say, 5-6%, that'll take Apple down, I think. Yeah. If you miss expectations on a stock trading at 36 times earnings, I mean, it could easily, I think, fall 20, 30, 40% if it is a bad miss.
Yeah, I mean, I bring it back to reality, I guess, so I think it could be right. So be aware.